although I would say Bitcoin's been fairly sticky during the war, over the last 5 or 6 weeks of the war, you probably won't see a recovery in Bitcoin until maybe the first month of the last quarter, right? So we're talking October, possibly November of this year.
According to Scaramucci, the biggest bottleneck for crypto adoption is regulation. He highlights the absence of key legislation, such as clarity around digital assets and stablecoins, as a major barrier preventing banks from fully embracing Bitcoin. While some institutions have launched limited custody solutions, the major money center banks are still on the sidelines. True adoption, he argues, will only happen when banks can safely custody Bitcoin, clients can earn yield on their holdings, lending against Bitcoin becomes more flexible and efficient. Until then, the market remains in a transitional phase.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
So I'm old school. I've been in the category that this is a cyclical bear market, traditional to the 4-year cycle of Bitcoin. And you've just crossed the halfway mark of the halving. And so you're on your way to the back half of this thing. You typically don't get any type of real recovery until the first quarter of next year. And because we had this slightly accelerated, and I think this was macro related to President Trump and some of his tweeting and the tariffs, and then obviously now there's a war. Although I would say Bitcoin's been fairly sticky during the war, over the last 5 or 6 weeks of the war, you probably won't see a recovery in Bitcoin until maybe the first month of the last quarter, right? So we're talking October, possibly November of this year. And so, people will be very down on Bitcoin. They'll be very down on the alt market, be very down on Solana. And of course, they'll be wrong because it's really just more of a cyclical thing. But I think where people are upset is that they thought, wow, we got a new administration that's positive on crypto. We're basically in like a jailhouse with Joe Biden and Elizabeth Warren. We were talking before the show started. I mean, these people were brutal. And so you were thinking that you were going to get better regulation, you were going to get better legislation, and you were going to get a ton of buying as a result of the ETF activity, Solana ETF, Ethereum ETF, obviously the Bitcoin ETF, quite celebrated. And you didn't necessarily get that, but you did not get it, meaning you're still seeing a lot of Bitcoin buying, a lot of boomers are buying Bitcoin, but it's just not enough, because you got whales that are selling into the OGs in this industry believe in the 4-year cycle. And so what they do is they fulfill the prophecy of the 4-year cycle by acting on the 4-year cycle and selling. The whales were pumping lots of coins into the supply at around 100,000, and that's why we dropped into the high 60s. I applaud Morgan Stanley for making the decision to launch its Bitcoin ETF. They priced it at like 14 basis points, which was a very competitive price, and they've got a huge wealth management division. And so if they even just move 0.5% or 1% into Bitcoin, it'll be very, very good for the market, and it's another sustainability issue. I think what's completely off the table is the notion that Bitcoin is valueless and all that other stuff. Just the network alone makes Bitcoin very valuable. But if you don't get the Clarity Act legislation passed, you're not going to get the banks to really open up. Sure, Bank of New York has an experimental program. I think SoFi now has an experimental program, and there's probably others where you can store or hold your Bitcoin in custody in those places. But until the big money center banks, when my private banker calls me and says, yeah, move all your Bitcoin, and you can move it here into our bank and we'll give you yield on it, or you can really borrow on it as opposed to the 25% LTV that some of the big money center banks, you're not going to see the real full-throated adoption. So, I think the estimate was in November of 2024, and I would have gotten this wrong, of course, because if you had asked me this question, would the Stablecoin Genius Act, the Clarity Act, both be passed by the end of 2025? I would have said yes, but here we are about to start. We're in middle of April, heading into May. We don't have clarity passed.
Scaramucci also touches on a bold idea: Bitcoin is part of national strategic reserves. He believes Bitcoin deserves a place alongside assets like gold, oil, and rare earth minerals. However, political division stands in the way. For Bitcoin to be adopted at a government level, it must become a non-partisan issue. That requires education, helping policymakers and the public understand its long-term value and technological significance. Until that happens, progress will be slow and incremental.
But I think it's very hard to hold Bitcoin in a strategic reserve if it's a partisan issue. And I think if we can get this to be a transformative, post-partisan, what's right or wrong for the country, what's right or wrong for the American taxpayer, then the answer is yes. But if you're in a position now where lots of people in the Congress don't understand it, lots of people don't really understand the future of money and where it's going and what Bitcoin represents in terms of the operating layer of decentralized forward money, it's not going to happen. And so I wouldn't push it. I'd be more or less where they were on the executive order last year, where they said, we win some in a lawsuit, we're going to keep it, we're not going to sell it. Whatever on the balance sheet of the government right now, we're not going to sell. I mean, the Biden administration was selling it right up to the end. I'm not sure if we've done an audit yet, so don't quote me on this, but I sort of think we haven't done an audit yet of how much Bitcoin the U.S. government actually holds. But my attitude is, my mission would be, let me rephrase that, my mission would be to explain it to people so that they get it the way the three of us get it, and then it doesn't have to be debated anymore. It just becomes one of the things. We have 28 different assets in our strategic reserve from a government balance sheet perspective. It's not just gold and oil. There's rare earth minerals in there. There's other commodities that we think are valuable to the manufacturing process. There's medical equipment, medical supplies in there, and God forbid we go through another pandemic. And so those things, no one's sitting around saying, oh, geez, let's debate the partisan benefit or detriment of having that stuff. We got to get Bitcoin there. But yeah, it should certainly be in the reserve. Every headwind that you can imagine has happened to this technology. Bitcoin, Solana, bureaucratic headwinds, lobbying headwinds, banking association headwinds, the sclerosis of Wall Street not moving quicker to adopt the technology or to adopt tokenization. Every different part of this that you could imagine is blowing in the face of these assets. And then look at where these assets have gone over the last 15 or 16 years. Now, yeah, granted, they're off their cycle highs and they're off their all-time highs. But think about where they are. Think about the use cases and think about the exponential adoption and the expansion of the wallets. It would be impossible to really study this and have a 4 or 5 year frame of mind and not be bullish. If you have a 5-minute frame of mind, then you're bearish because we're in a bear market. And what happens in a bear market is people say, oh, this asset's dead, and they walk away from it. But, underneath it is the growth and the exponential activity and the fact that it's just better technology. Other than that, I would say in the next 2 to 3 years, you'll have 24/7 stock and bond trading. The NASDAQ announced the deal with Kraken where they're going to use Kraken's rail system, start the process of tokenizing stocks and let them trade 24/7. We have the capability to do that. I would make the argument, when I was a kid in the industry, we were literally T+5. It took 5 days for a stock that you bought to land in your account. Now we're T+1. Everybody knows that's listening into this. Generally, people listening in are quite sophisticated. They know you could do it in T+1 hour through the blockchain. And so the question is, would that be better for us or worse for us? And I think it'd be better because when you have 24-hour liquidity or 24-hour activity, it changes your risk profile. Like if you've got a war going on and you don't know if the Strait of Hormuz is going to be open or not open and you're looking to get out of something, well, guess what's open? The crypto markets are open. So, okay, that's where my source of liquidity is going to be in the overnight markets. And if you had everything overnight, then you'd have massive improvement in liquidity, which I think would also change the profile and perspective of people. So I generally like it. I think it happens in the next 2 to 3 years. We own Solana, we own AVAX, I own Avalanche. I'm sorry, the Treasury, the AVAX one. We own some Forward, which is a Solana Treasury, as well as Solana. We have some STRC, which is sort of the yield-bearing securities coming out of Strategy. Obviously, I have a very large position in Bitcoin. And so, listen, I'm long-term bullish on this stuff. It's not a great environment for it. But again, if you looked at where we were 5 years ago to where we are today, I love where we are. I can't believe the growth in this industry. And so I just believe that if we're sitting here, if I'm lucky enough to be sitting here with you guys 5 years from now, I think we'll look back and say, wow, those prices in 2026, I'm not sure why people were so negative given where we are today in 2031.
Perhaps the most important takeaway is psychological. Scaramucci draws a sharp contrast between two types of investors. Short-term thinkers, bearish, reactive, emotional. Long-term thinkers, bullish, patient, strategic. In bear markets, people often declare assets dead and walk away. But beneath the surface, innovation continues, adoption grows, and value compounds. The difference between success and failure in crypto, he suggests, often comes down to time horizon.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.